This is our market analysis now, 49 minutes after 2. We have Toba, the Treasury Sales Manager from Nedbank Eswatini. We want to understand the latest in terms of foreign exchange, commodities and equities. He's here in studio. Toba, good afternoon. Welcome to the show.
Thank you, Swiso. Good afternoon to our viewers.
Looking at these numbers, slight rent gains across the board. What is happening here? Because obviously they're all down marginally, but are we seeing a short-term technical sort of correction here? Is there broader fundamental support for the ZAR basket right now?
Yeah, so it's mostly just the fundamentals. We've got a number of data in South Africa that came out starting from yesterday, where we had first quarter GDP numbers, which showed that the economy grew, but it's sort of at a stagnation right now. And then we also received PMI, Producer Manager Index, this morning, as well as business confidence, which showed that business confidence lowered in South Africa. So there's quite a lot of technical data coming out. The US as well. We had jobs opening numbers coming out stronger, and on Friday we're expecting non-farm payroll. So it's quite a technical week with a lot of economic data for investors to digest.
Hopefully, as we get our graphic up on the screen with the foreign exchange, I do want to understand index per index here with the USD and the SZR movement hovering at what, 17.85, barely down 0.006%. I want to understand from a treasury perspective, really what levels corporate clients are really watching closely here, as it were, and how they are hedging given this tight range.
All right, so I'll just look at where we're coming from. Maybe in the past week, we are seeing a downward trend of the rate, so which means that it's favoring our importers who are buying. I think this morning we actually saw it reach levels of 17.77 and then bounce back up to the 8.5 that we are seeing now. So corporate clients can take advantage of that and hedge their exposures, their import exposures, which means that they'll be paying less for their imports.
Sterling losing at 0.29%. What is the reflection here? Is it a risk-off sentiment in the UK economy or global foreign exchange? There's repricing rate expectations, of course.
Yes.
I wonder if that is the effect. How does this impact importers sourcing from that area?
Yeah, so likewise, the sterling is also following the trend that we're seeing in the dollar. It's quite a number of things as well, but mostly it's just a global economic sentiment in that there's still a lot of uncertainty with the global economy. We have today being the deadline for U.S. trade partners to negotiate deals with the U.S. So that's sort of jittery in the global market, sort of drives the numbers that we are seeing. Also, we saw the U.S. Today doubling the tariffs on aluminum and steel. So all of that sort of impacts some of the industries, especially mining, and the UK being one of the major mining economies. So it means then that they will be sort of paying, or their customers will be paying more to import those metals into the US.
And I suppose we can sort of apply the same for what is happening in the Eurozone. But there's also the inflation that is still sticky in that block.
Yeah. But they've sort of managed to sort of keep it to a minimal, I would say. Right now, the inflation in the Eurozone is around 2.5 or just sub that. So they have managed it. They've managed it quite well.
They've done a good job.
Yeah.
As we move to commodities now, we will have our graphic go up, and our viewers at home will see that gold prices remain elevated. And of course, this is despite a tiny dip today. What is keeping gold so high? And the usual, it is a safe haven, I know. Is it inflation hedging? Is it geopolitical hedging, or a reflection of dollar weakness?
So it's a combination of, I would say, mostly investors hedging their exposures.
Okay.
With the global uncertainty that is currently going on, and today being that key day for U.S. trade partners to sort of negotiate deals with the U.S., it sort of then creates that uncertainty that then drives investors into gold. We've also seen a number of central banks just piling their gold reserves,
Yes.
increasing their gold reserves in this environment.
Interesting indeed. Something to take advantage of. This Brent crude oil sitting at 68.36 US dollar per barrel, of course, negative 0.31% there. Are we really taking advantage of this number that is quite low by historical standards?
We're coming from some scary numbers in oil, and I know that oil is the price of oil is rather close to many of our hearts, because it affects fuel and all of that. This is this dip that we're seeing here, the 0.31%, is not really that significant, but there's quite a number of things that are weighing on the price of oil. Firstly, we have OPEC Plus planning to increase their output in July by about 441 barrels per day.
Sure.
We also have the global uncertainty, which then creates limited demand because of all of the trade agreements and all of that are currently flying around. But we sort of have seen the price of gold, I think in the last 2 days, in the price of oil, in the last 2 days sort of increase due to wildfires in Canada disrupting production and actually reducing production by about 300,000 barrels per day. So that has sort of hedged a further dip in the price. I would believe if that was not the case, with what I've just counted, the OPEC Plus increase in production as well as the global uncertainty, would probably be seeing a lower price than what we're seeing now.
We move to equities now. S&P 500 is rallying, and as it is rallying, it is up over 0.5%, nearing 6,000. If you look at it, 5,970.37. What does this tell us about what is happening with tech stocks in the U.S.?
Yeah, so they are the major drivers of the performance that we're seeing in the indices. So we have a number of them. The share price going up by over 1% today. The big ones were Nvidia, your Packard Bell and others. But it's mostly just driven by performance. It's also driven by the demand for AI technology in the economy or in the production lines. More and more companies are sort of looking at how they can implement that into their production cycles. So there's quite a lot of demand, and investors are sort of looking into how they can get into AI, which then pushes the share price as we continue to see.
100%, and of course, the U.S. wanting to stay ahead of Asia. Asia trying to really be at the top there in that particular field. But FTSE and the JSE All Share Index there, both of them close higher. The JSE All Share Index is up 0.67%. Are we seeing confidence return here in South Africa's assets, or is this mostly riding in, of course, mining and commodities?
It's definitely the last one. It's riding on the price of precious metals that we are seeing. South Africa being a major producer of or exporter of a number of hard commodities. A surge in the price of those commodities will push some of the major companies that are in that index up. So it's mainly that. Otherwise, the business confidence because of the survey, there's a survey that actually came out that showed that business confidence dropped from about 45 to about 40. So we're seeing that the confidence is a bit low, but just it's at the back of the mining sector.
It's a marginal drop, nonetheless.
Yeah.
Toba, thank you for your time. I know my heart and many people's hearts are on that S&P 500 story, and hopefully we can not just have that conversation, but we can fill it in our pockets as well before the week closes at the very least. Toba, Treasury Sales Manager, Nedbank Eswatini. Thank you for staying with us on the show today. This has been Nedbank Business Watch. See you again next week. Bye-bye.
Make better money choices. Choose a bank that takes your money seriously. Business Watch was brought to you by Nedbank.